Welcome. Thanks for joining me today for this leverage trading Q&A. Little man has joined us today as well. Special guest. I told him no leverage trading until he's 2, so he's gonna hang out with mommy as soon as she gets home, which is right now. All right. Sorry about that, you guys. Thank you. We'll give everyone a minute or two to join in. I can see you guys on the chat here. And I've got my Twitter pulled up with some weird cat thingy here. Get rid of that. Hope you guys are hanging out this weekend and not getting chopped up by the market. I mean, this is basically what happens after big moves, you guys. There's always some rebound and some chop, and that's when a lot of people that have missed the original move jump in. You know, if you were planning on shorting this and never shorted, and you miss this whole thing, and you're just planning on it going down more or whatever, or you're revenge shorting, it's easy to get caught and chopped up in here, trying to catch another big move, or even just trying to long a huge bump and then getting stopped out or liquidated or whatever. So it's just really important to, after really big moves, if you catch the big move, great. And then the immediate rebound. And then after that, I usually just sit out and kind of let the dust settle because that's when it's just really choppy and sideways, especially on weekends. Could you please let the small man lead the live? His advice could more correspond to the current market situation. Yeah, he probably would have done better than me trading the last few months. He probably just bought a bunch of stupid shit and been rich. But anyway, so feel free to ask questions anytime, you guys. I did make some notes here. I really just want to help educate everyone about leverage trading and what it is, because a lot of people see it as a get-rich-quick scheme, and it's really, for leverage trading, for me, it's more like compounding, and for a lot of people, it's go broke quick, all right? So it's really a lot about risk management, and I know you see a lot of like $1 million P&Ls and stuff on Twitter, and that's totally fine, but that's just unsustainable. I don't like to take big losses. I like to keep my losses small and then let some of my winners run. So anyway, we'll get into this. Thanks for joining, everyone. First off, just be aware of what conditions are on your current computer. If you have a shitty computer, terrible internet, your internet's going in and out, make sure, sorry, I'm reading the questions on here as well. Make sure that, oops, wrong button. Hold on, you guys, I apologize. I'm going to get this popped up so it's bigger here. All right, so make sure that you are on a good computer. Make sure you have a good internet connection. Make sure you have backups, all right? So if you're trading on PrimeXBT, make sure you have it pulled up on your phone, just in case something goes out with your computer. You can hop on your phone, which is not on the same internet, right? And because you can use your mobile, and you can get on there if something happens to your internet. I've had my internet go out during trades before, during scalps. I've had my mouse die during scalp trades before when I need to close. So make sure you always have a backup. I have friends that have hardwired mice. I have friends that have hardwired mouses in their drawers on their desk in case something happens to their wireless mouse. You just never know. All right. On my laptop, I have a Bluetooth mouse that is garbage, and I can't scalp on there because sometimes it just won't click out of nowhere. So I either need to get a new mouse or just stay away from scalping on there. Somebody asked about my mom's portfolio. She's been 100% cash since she sold her XLM at 65. I've been, teaching my mom about just taking profits and whatnot and not getting too hung up on missing some profits. And she's not growing any insane amounts, you guys. But she started with not very much money. And she's up like over 10x this bull run. And she actually hasn't lost any trades. She held through every dip. Most of her trades were almost spot on. But she held through every dip, and now this last one she had cashed out on everything and has just been sitting. She hasn't been bugging me to buy anything, and I haven't been trying to get her to buy anything. So, but with her, I kind of just give her like the best looking high time frame chart I see, and usually I just have her buy a little bit and hold through it when the market conditions are right for it. which is a lot more than I do because you guys know I'm a short-term trader. So make sure you have a good setup, all right? Make sure your internet's good, all that good stuff, okay? Also, make sure you understand the exchange you're trading on, all right? I do have PrimeXBT tutorials. Over on my YouTube, I've got a bunch of risk management videos from my PrimeXBT series. I've got tutorials, okay? Make sure that you understand how to use the exchange, because I've hopped on an exchange before, not understood the rules or whatever, and I've like lost money because of that, just because I didn't understand how an order worked, or how a setting worked or whatever. So make sure you understand everything before using it and before using real money. Anytime I get on a new exchange for the first week or two, I use very, very small amounts just to get a feel for it, because you never know if you're going to put your stop loss wrong or whatever, or type wrong or click the wrong button because it's new, and then completely shoot yourself in the foot, right? On that note, there's certain things you should understand, like the fees to open and close a trade. All right, you should be calculating those. On most exchanges, it's about 15%, okay? It's about 1.5% on a 10x for most exchanges, all right? So if you're using a 10x position, it's about 1.5% of that position. So a $10,000 position would be $150 to open and close that, all right? It's usually basically 0.75% on the way in and 0.75% on the way out. Now, there are certain exchanges that will give you discounts on fees, all right? So you want to know that and what it takes to get those discounts, okay? There's exchanges that will give you discounts if you set limit orders. And if they get filled, you'll actually get paid. Whereas if you market order, you have to pay. All right. There's exchanges that just offer lower fees than others. Right. So you need to be aware of those as well, and different strategies for those. Like PrimeXBT, if you have a certain amount of BTC volume a month, they'll actually give you a 50% discount in fees. So once I hit that discount, I can be a little bit more willing to get in and out of positions quickly, because I'm getting a big discount on fees, right? So maybe in the beginning of the month, or if I don't keep up that limit, sometimes I take breaks from trading and things. If I don't keep up with that volume to reach that, which I usually do, but if it ever went off, I would probably slow back my trading and start to just get some like higher time frame trades that I can get in, hold a little bit longer, and get out rather than in and out. All right, make sure you understand isolated versus cross margin. All right. Isolated margin, the only thing that's going to be at risk is the actual position you're holding. All right. So you put $1,000 position in, that is all that's at risk. There's no more of your account at risk. It's just that $1,000. If you get liquidated, that $1,000 is gone. All right. And also know your liquidation level. It's usually about 70% is going to be liquidation. So if you put your stop loss at 60%, you can actually save yourself about 40% of that position. Whereas if you just let yourself get liquidated, that whole position is gone. All right. Cross margin is going to be your whole account is at stake. Now on PrimeXBT, you can actually move funds into your account to trade and keep some funds in your wallet. So that way the funds in your wallet will be safe, but the funds in your account that you're using as equity will all be at risk. All right. So if you have $1,000 on there and you're trading with a $500 position, that whole $1,000 is still at risk if it's in your trading account. All right. So if that position keeps going against you and you don't have a stop loss, it's going to keep eating into your available margin, and it's going to use that extra $500 you have to feed that position as it goes against you. And once it goes too far against you, that whole position is gone. Now, there are some good strategies for cross margin. All right. Some very good strategies, especially if you're very confident and you're good with your entries and you're not going all in every time. All right. Because if you are using cross margin and you're putting your whole account at risk every time, all it takes is one bad mistake or one bad dump like this to really hurt you. You could grow your cross margin account from 10,000 to 1 million or 2 million or 10 million on the way up. And then all it takes, it could take you this whole move up here to make $10 million from $10,000. And it only takes this one small move to lose it all. All right. I'm seeing a lot of questions. I'll answer some questions here in just a second. Okay. Understand one more thing you guys should understand is slippage, position sizing, things like that. So if you are just starting out or you're using small positions, you don't really have to worry about your slippage and things. You can pretty much just get in and out whenever you want. If your account starts to grow and you're using larger position sizes, you're going to start noticing that you're going to be miscalculating your entries and exits a little bit, because you're going to be getting some slippage, which will, make you get worse exits basically. So I know which exchanges I can use larger positions on, which exchanges I need to use smaller positions on, how the fee structure works for these entries, whether I need to limit in or out, whether I want to use cross margin, all right, or isolated margin. And there's certain exchanges where I won't use as large of size, okay, because of the slippage. Now, I was trading on an exchange earlier this week, and I was up about $2,500 on a quick position, and by the time I got it closed, it was about $300 profit, and I was basically just trying to mark it out, but there was no liquidity, so I could not get out of that position because there was no orders for me to close it out, and by the time I got it out, it was basically back to break even. All right, so you need to be aware of this, because especially if you're at a loss on a position and it's like a $500 loss and there's no liquidity and it turns into a $2,500 loss, that's a big difference. All right, so let me look at some of the questions here, and feel free to start posting more questions, you guys, and do realize that there's a slight delay between me seeing the question and you hearing me, just with the recording. So what percentage of my portfolio do I keep in spot? All right, so I have a HODL bags that are for much lower. I don't really touch those. I have shaved some profit off of those on the way up, and I'm at like a comfortable HODL level where I don't really feel the need to sell any of those right now. But if we get a push to 50K-ish or 45K, I would probably consider shaving a little bit of that off, right? But now, so that's money I don't really think about. I don't even look at how much is on those. Now I have a trading portfolio that is spot, and I have leverage trading portfolio. All right, my leverage trading portfolio is less than 10% of my spot trading portfolio. All right, if I want to get a big spot position, if I want to do a very large position, I can take a large spot position. I can average into that, dollar cost average into it on a high time frame, and there's no risk of liquidation. I can put a relatively sound stop loss. All right. And I do that when market conditions are hot or when I want to start to getting some exposure if I think we're going to bounce. All right. Now, there's no risk of me losing all that money on a drop like this. All right. If I was just in spot on Bitcoin, let's say, and I did think we were going to bounce at 39, and we obviously didn't. And I only had bought one Bitcoin at that point because I was a little nervous from some of the charts I'd seen. But if I'd only bought spot, and let's say I bought $100,000 worth of spot, all right, you can see here that would have been a 23% drop maximum from my entry. And by the time I woke up, we basically probably would have bounced, right? So maybe I would have been down 10%. So I would have been down 10K on that $100,000. Now, if I didn't have a spot trading portfolio, or I only had $5,000 in my spot trading portfolio and $95,000 in my leverage trading portfolio, and I put all my leverage trading portfolio in here, I'm risking liquidation. All right, even a 10x long from here would have gotten liquidated because that'd be 250% negative. All right. So obviously I use stop losses, but sometimes in the event of those large drops, your stop losses don't matter because there's so much slippage anyway. Okay. So my leverage trading portfolios are very small compared to my spot trading portfolio. I do have one little bit larger leverage trading account that I use maybe 3 to 5 times a month. When I'm on my computer, I'm focused, I'm not burned out, market conditions are right, and I spot like a very, very good setup. So if I spot a really good setup, like I spotted here on this Bitcoin short from the from the distribution, I was able to get a $1.5 million size short up here at about 56K before the drop to, 50. I think I closed at 53K, unfortunately. But again, it was still very nice profit. But I only use that account 3 to 5 times a month. And then when I'm just trading low time frames, I have 2 to 3 other accounts that I use with different account sizes for different market conditions, depending on what asset I'm trading. So if I'm trading Bitcoin, I really, really, really like to use PrimeXBT. All right. I really enjoy using that with my strategy for trading Bitcoin. The liquidity is great. I can get into 10 Bitcoin size positions with very minimal slippage. I can get in and out really quick. Price moves well. The fees are pretty low with that 50% fee adjustment. So having multiple accounts has really helped me a lot. And I do have basically a degen account. All right. So I have an account that's very small. I only keep $1,000 to $3,000 in it usually. All right, $3,000 max. Usually I keep about 1K in it. And that is the one you guys see me posting a lot, where I use 100 or 150x leverage because it's low risk. All right, because my max, I'm using isolated margin, and my max risk is $1,000 on those positions. Sometimes I only use $500. Okay, but that's when I'm basically just trading and scalping, and I'm not finding any real clean high time frame setups, and I'm just getting in and out on low time frames. And those profits can compound really nicely. And there is still times where I totally take a big hit because I just can't get out in time of my position, or I'm just completely wrong and I'm stubborn and let it go against me. But the difference is I'm using a $1,000 position size, and I've already, I'm already playing with house money at this point because I've already taken that $1,000 and turned it into another 1,000. So at this point, it's house money, right? So if I lose a $1,000 account because I was, getting greedy or whatever, it's not a big risk. Now, if I was using a $10,000 or $100,000 account all the time, there's going to be a time where I'm going to have a bad day and I'm going to lose leverage trading, and I'm going to get mad at the market and I'm going to be fighting it. And that's when I'm on my small accounts and I'm just trying to trade on these. And if I blow that whole account, I just call it good for the day. All right. But usually I usually try to cut myself off at about 30% drawdown on my small accounts. On my large accounts, again, I only do 3 to 5 trades a month, and it's usually 5 to 10% drawdown maximum. And that's only because my losses are small and my wins are larger. All right. You should really try to keep your max drawdown on a large account to like 2% max on a trade. So like on my spot trading account, I usually do try to do that, where if I have 10% risk on a trade, I'll put, like 25% of my account in, and then it knocks it down to about a 2.5% risk. Let me see. So having different accounts, you guys, is huge. I really recommend that. Give it a try. It'll keep you off of your main account a lot. And then when I spot a really good setup, I'll be like, oh, this is a great trading setup. This is going to be a good one. It meets all my criteria. That's when I can get over onto a different exchange, and depending on what the asset is, get onto a different exchange and say, okay, I'm going to get into this trade. It's nice and calculated. It meets all my criteria. This is a high probability trade entry. I'm going to take this. All right, let me look at more questions. Also, like on the weekends, sometimes I'll leave. So I like I said, I keep $1,000 to $3,000 in kind of my DGen account or whatever. Sometimes on the weekends, I'll just take like all that cash off and put like $200 in or $250, and then just play with it if I feel like I'm bored or if I feel the need to really catch some volatility. It's just super low risk. Half the time I'm just like blindly entering because it's a weekend and I'm on my phone. But again, it's keeping my risk low, you guys. And yeah, I do have some gambling tendencies sometimes. But with my large accounts, everything's very calculated. With my small accounts, I can be a little bit more risky. But also it's actually just less risk overall because I've put myself in that position to keep my risk low. Okay, let's see. How do you use such high leverage on your scalps? Very tight stop losses. Also with such leverage, do you use limit orders because of the market fees? So again, depending on which exchange I trade on, and this is obviously sponsored by PrimeXBT, you guys. I've been working with them for a while. They actually came out to me and asked me if I would help them bring leverage trading education to the space because there's not enough of it. So for that, I'm very thankful that they've helped me out with this because I'm glad to keep bringing this to you guys, and I have more videos coming in the series. But I will mention some other exchanges too or just because I use them. So like for Bing Bong, you guys, I do use Bing Bong, and their fees are very low already to market in and out. Excuse me. So they have low fees, and so I can market in and out all day. On Femex, I do try to limit in or out, okay, because I get paid to limit in or out. Sometimes I can't, and I do have to market in, or I'll like market in or out like half and try to get the rest of my limits filled to get paid. And I do like to use a little bit lower leverage on Femex for that reason, just because the fees are crazy. Bing Bong, like 150x fee is nothing. It's like 7% or 6% or something. So, which with a $1,000 150x, that's like $60 or something, right? So that's nothing. That's not a big deal to me. The other thing too is actually using high leverage. If I use $1,000 100x, I have to cut that sooner because my liquidation level is closer. If I use a $10,000 10x position, all right, that's the same size position, but that 10x leverage means that my stop loss is way wider. And if my stop loss is way wider, I could actually let that position go more and more negative and end up losing more money. So for me, and my strategy on scalping, especially low time frames, is I need to have very, very good entries. So I got to be patient and I have to find that entry. And once I get that entry, I know pretty much within the next 30 seconds to a minute if I'm right or not. If I'm right, I can let it run. I can add size. All right. If I know I'm right, I can add size. And then if that goes against me, I immediately can cut it. So there's some strategy to that. I'll share that with you guys here in a few minutes. I will share a little bit of that with you guys. It's too in-depth to go all the way through it, but I will share a little bit of how that works, just so you guys can kind of test that out and get some ideas. But let me go through a few more questions, and then I'll go to that little strategy kind of thing I was just talking about there. How do you choose your stop loss level? I do have some good videos on that on YouTube, either in my breakfast trades or on my PrimeXBT series. There's too much to go over to stop losses right now. It just depends on the trade and the different strategy and what I'm using for that trade. But I usually do manual stop losses and I wait for a candle close above or below my area. I don't usually let the little wicks get me on low time frames, but that's taken a lot of practice to understand if this is going to be a wick or if it's going to actually be a break. Does volatility for scalping die in a bear market? No. Volatility is always there, bullish or bearish markets, whatever market you're in. But you just need to know the conditions and know how the volume is for scalping. Weekends, it's very bad. The order books are very thin, and price can, let's just say you're in a trade and it goes up, so you're shorting, and normally on the weekday you would see price do this, all right? And this is what usually happens. You find a setup and you short here, and this is what usually happens with that setup, all right? Well, on the weekends, a lot of times I see this. So I would enter this short here, and it'll go like this, and this is where it should just keep dropping. Nope. Okay, it's going to do that. And then that's what happens on weekends. And then sometimes it does this again, and then it finally goes down. All right, so weekends are very choppy, very stop hunty, and that gets me a lot of times. And I just usually sit out, or like I said, throw a couple $100 in an account. If I can grow it to 1,000 or 1,500 or 2,000, great. If not, I lose $200. All right, that is how I manage my risk, and that is how I compound gains. Let's see. Volatility is king for scalping. Definitely, if you want to be a scalper. Honestly, sometimes you guys, I'll have like alerts set on like Bitcoin or something. And honestly, sometimes I'll just be like, I don't know, sitting on the couch or making dinner or whatever. And I'll get alerts and I'll see just some huge volatility like this. And I can jump on my computer or on my phone. My computer usually, again, I don't use large positions on my phone most times. If I'm on my computer, I feel better about using large positions. But anyway, so I can jump in immediately and just start getting involved in the volatility as soon as I see this. Okay, now when this happens, when it's sideways, I don't even usually scalp, hardly at all. All right, but once this happens, this brings volatility, and you can see how much volatility we start getting here. All right, if I go down to lower time frames even, this is where I start to get excited about trading, is when we get these big moves. And actually, this was the China FUD yesterday, and I just happened to sit down on my computer and see this huge, massive candle come in, and I just hopped in on a short to catch, the extra drop. And as soon as momentum stalled and started going back up, I got out. All right. And that's one thing I would say if you're trying to learn to scalp, is if momentum goes against you, just get out, because you never know how far it's going to go against you. If you're in profit, take the profit. When did you go trading full-time? What were the best resources you learned from when you started? So I went trading full-time back in August. Best resources, you guys, are yourself, honestly. Practice on the charts. I drew a ton of charts. Like, I would just draw lines. I'd be like, okay, well, this looks like a line here. And, oh, look, price went through my line. Let's see what happens. Oh, cool. Okay. That's literally what I did, you guys. And I would, start learning patterns. So I'd go on the internet and learn a bull flag or a bear flag or an inverse head and shoulders, things like that. And I would learn what makes them work, right? So how do they work, right? This looks like a really nice bull pennant or bull flag, but it obviously didn't work out. All right. But if you're a new trader, you would be looking to long a breakout here. All right. And now you might see these and they break out and you long them 5 out of 10 times and you win, or 10 out of 10 times and you only win 4 or 5 of them. And then when you start, it's trial and error. And then when you start getting burned by these patterns, you're like, why isn't this working out? Well, then you learn volume and you're like, oh, I need a volume breakout of this. Okay, I was reading that wrong. So it's all trial and error, and just start off slow and work your way up. But I would say learn candlesticks, learn chart patterns. Those are the easiest things to trade. If you see an inverse head and shoulders, you can trade that, right? Even if you don't know much. If you see a bull flag, a bull pennant, you can trade those, even if you don't know much about charting. What is the best resources I learned from too? It's just asking questions on Twitter, honestly. I learned a lot from a lot of different guys on Twitter, and I would literally just post charts under theirs and be like, hey, can you tell me if this looks right? All right, I see what you're saying there. Or I would go on their chart and be like, hey, can you explain to me how you came to that conclusion? Or would you expect this to happen because of what you posted in there, right? So understand that these big accounts will help you if you go about it appropriately and you're questioning and you're genuinely asking questions. I'm always willing to answer if I see them, obviously. But also just practice, you guys. Practice your charts, come back to them and see how they played out. If you start to get things right, you're going to be like, oh, this is starting to make sense now. Okay, I put this line here, and then my RSI went up like this, and now I see that price went up with this, It takes a long time to get the hang of, you guys. And then once you start to figure out how the charts work, then you can build a strategy. Because once you build a strategy, you'll just see things that meet your strategy. Be like, oh, this is a good entry, all right? My strategy right here would have this as a very good short entry. I can just eyeball it and see it right here. This is where I would short, okay? And I can just eyeball this and I see this high volume here. Like this is 110% one where I would do a 150x short with like $1,000 position. And if it doesn't reject right away, I would get out. All right. So you just start to see these things because they meet your criteria. Now I do price action trading. I'll use indicators like OBV. All right. I use Top Goon X a lot as well. So there's a million different indicators you can use. And you just have to find out what works for you. But always feel free to ask questions to people, you guys. Feel free to study. I went on Google a lot. I studied a lot on Google. I learned about Wyckoff, market structures, market psychology. All right. And I understand market psychology on low time frames. All right. So another thing I can see here is I would short this candle as well. All right. And this is how I catch the top because I'm shorting these high volume. Now, don't take this for granted. All right. There's more that goes into this. And I was just about to say, I bet you I have bearish divergence here. And you can see here, I have a double top. Okay, so I have a double top, and I have a very high volume, bearish divergence, FOMO candle here. This is also where I can look for a very, very high risk to reward short because I'm shorting it right here, and my stop loss is basically right here, right? But it takes time to develop that and get you and understand what makes this work. But study on Google, study market structure, all right? Understand tops and bottoms, accumulation, distribution, psychology of a market cycle, all right? Like the depression, capitulation, all that stuff. Really read into this stuff, you guys, because you want to know how it works. You want to know why people panic sell. You want to know, I feel like I say this a lot on Twitter. I'll be like, all right, you guys, if this support doesn't hold, we're going to see a massive sell-off here because you have longs trapped up here that are all going to have to either get stopped out or cut their positions underwater, and it's just going to be a domino effect, all right? And that's how I found tops on some of these plays before, and I've mentioned that on Twitter. So once you understand all the inner workings of the market, you can really start to take advantage, and you're going to see, oh, wow, that's a lot of sell volume. Wow, that's really cool that once this level broke down, you could see all these people panic sell or whatever. Let's see. Keep going down the questions here. I'm excited to learn leverage trading. Been doing it with futures and options for years, but never crypto. Awesome. So a lot of people do options and get into crypto and still find success, but just know it's a little different. And it's obviously 24/7, which can make it a little bit more likely to overtrade. So just be careful of that. What kind of TA do I use? I have different strategies for trading, you guys, and sometimes they're on different on different time frames. For the 1 minute chart, I basically just use momentum. All right. There's not too much. I use my indicators. Top Goon X is really good on the 1 minute charts. But I really just play the momentum, and I kind of reverse trade my emotions on the 1 minute chart. And it's taken a long time to develop, but I also use higher time frames to confirm or deny that. So my biggest advice too, when you're leverage trading or any trading, is to zoom out first, see where the chart is at. All right. Because you would hate to be like, if you're, let's say the price is right here, just below this orange line, which would be a resistance, you would hate to be longing on a 1 minute chart and then zoom out to the daily chart and realize this is a 1 minute, this is a daily resistance. So realistically, if price was up here on the daily chart, I could go to a 1 minute chart and look for a short scalp because price is up at resistance, right? Or a 5 minute chart or 15 minute or whatever. So start higher time frames, figure out where price is at in the range, go to lower time frames, make sure you're shorting at resistances and longing at supports. All right. And then if you see multiple resistances, so if you see a 1 day resistance, a 4 hour resistance, a 2 hour resistance, a 30-minute resistance, and price is there, that might be a good short opportunity, or vice versa if it's a support. But if you go through all your time frames and you see it's only a 2 hour resistance and that's it, and there's no resistance on any other time frames, it might not be as good of a short opportunity. All right. How do I select the position sizing when scalping? It's sort of based on, it's based on risk of my account, really. Like I said, on one of my larger accounts, I don't like to risk more than about 5%. But if I'm on like lower time frames with my smaller accounts, I'll usually just use like $1,000 or like 1 to 3K. I usually just use 1K. It's just easiest. But I'll usually do that, and then I'll just adjust my leverage depending on how I want to, on how confident I am in that trade, basically. Like sometimes I'll be like, let's go to a 1 minute chart. All right. So sometimes I'll do this. Like let's say I think price is going to bounce here, right? And I don't know where it's going to bounce, but I think we're going to bounce soon. I might enter here and do like a 10x leverage long or a 20x leverage long and say, okay, I'm going to do a small leverage long here because I don't know where the bottom is going to be and I'm not confident this is it. And then it goes down and I close out at break even or whatever, or a small loss. And then here, I'm more confident that the bottom's in, and I'm more confident with my basically risk to reward here, saying that if this doesn't go straight up, then it's not the bottom and it's going to go way down. So this is where I could do like my 100x leverage. All right. Because my invalidation is very, very tight. All right. So sometimes if I'm not very confident, I'll do a smaller position, kind of feel it out. I'll get stopped out. It's a small loss. And if I don't feel comfortable, I'll just sit out. If I'm like, okay, I'm right overall about the price going up here, I just was wrong on my entry. And the whole saying of your stop loss is my entry is a real thing, especially on low time frames. So like a lot of people enter here with a stop loss, or they enter anywhere. Let's say they enter here with a stop loss below here, they get stopped out. Enter here, stop loss below, they get stopped out, right? So stop loss below here, your stop is my entry, and we go up from there. Again, if you shorted here, you put your stop loss just above there, you get wicked out before price drops, right? I'm not going to answer any current trading questions, you guys. I will say that Top Gun X has a buy signal right now. With price trying to float up here. If momentum can push up here, you'll see a nice little trend here probably continue up on the 1 minute chart. So we do the buy signal, and OBV is trying to push with a nice little V at the bottom. We're not in the clear yet. We're still at some resistance. So this is where you're going to see resistance. And this is how I do it, you guys. I know exactly when we should push. And if we don't push when we should push, then I know to get out. I know right now if I was long, I could, depending on my entry, I could probably still hold this for a little bit, knowing that we're not going to go straight up yet. We might see a little turbulence here, but as long as we probably hold like somewhere like here, okay, then we'll probably go up. And we're getting close to we're probably still in a little bit of chop area. But if we get a little bit more momentum upside here, then we're going to see a quick breakout soon. All right. But anyway, so that's my quick analysis on the 1 minute chart. But again, I know when price should start to go up, when it might find resistance. And I would need to see some more volume and some uptick come in soon and just see price hold this. If I got in down here, I'd still be holding. If I got in up here, I would close and probably wait for a better entry. But anyway, do you have a good book to recommend? I don't really have any good books to recommend. I didn't do many books. I did a lot of internet Googling, and then just live action trading, you guys. That's the only way to learn some of this stuff. And then you learn what works for you, and you're not learning somebody else's strategy. But somebody did share books in here. They said Encyclopedia of Chart Patterns by Thomas Bulkowski is a great one for learning patterns in TA. Right here. And then another one, Japanese Candlestick Charting Techniques by Steve Nielsen, is another banger. All right, thanks, Didasaur. Again, I'm not a book guy, you guys. I like to watch videos, and I like to learn by doing. You can see here we're probably going to get a little drop here. We're still kind of bullish, but we're kind of neutral right now. But yeah, I mean, this is how I look for on low time frames. So, and this is where I thrive, and I enjoy watching these, even if I'm not trading, just to, kind of keep sharp and learn a little bit. But we're still a little bit of resistance, and Top Goonex helps with that too. If this momentum clears here, you're going to see price skyrocket. All right, but for now, we're still in resistance zone. So that's why we haven't rocketed yet, and we still have a chance to break down. So we're kind of still at that 50-50 zone. Hey Gunnar, can you please explain how you select your position sizing? Like I said, you guys, find your risk. So here's the long position tool. If I was longing here, all right, let's say I have a $10,000 account because it's easy for math, and I'm going to do my stop loss below this line, so 0.25%. All right, so a 10x leverage trade would be 2.5% risk plus fees. All right, don't forget about the fees. So let's just say if and I need a good risk to reward too. So this is 2-to-1, which isn't bad, but I like at least like 4-to-1, 3-to-1, 4-to-1. So I could do something like this. And don't trade off this. This is not a setup. All right, I'm just drawing lines. So if I had a $10,000 account, I could do a 5x leverage trade, full size with that full $10,000. It would be a 1.25% risk on my whole account, so $125 plus fees. So it'd be about a 1.75% risk. That's manageable. So if I lost that trade, I'd be down $150 to $200. Not a big deal, right? So that's how I would calculate that. If my stop loss was down here, all right, I have to go a lot smaller position because I'm going to be risking more money there, right? If I do a 10x position there, that's going to be 6% of my account. If I get stopped out, which would be $600. That's a lot larger of a loss that I wouldn't want to take. And be careful, you guys, doing that. You really should use consistent position sizes. So if you have a $10,000 account, I would use like $6,000 or $7,000 in there, because if you lose one trade so let me see if I can explain this properly. So I'm gonna have to probably type this. So let's say you have a $10,000 account, all right, and you lose 5%, and let's just say you lose 10%. So you down 10%. So now you have $9,000 in that whole account. All right. Now you need, what is it? Like 11%. So 11% of that would be $990. So you need like an 11% win to make back that 10% loss. So let's take this a little step further. Let's say you have a $10,000 account, you lost 40%. So now you have $6,000. Whoops. Okay. Now you need, and see, now we're breaking out. That was awesome. We tapped right on my support area, on my invalidation, and rocketed. That's funny. I actually thought that was going to happen. I just didn't want to say anything because I don't want any of you guys FOMOing in while I'm talking here. But anyway, so that was awesome. That played out perfect. And we still have momentum still trying to go, so we're still not just going to moon just yet, I don't think. Probably have a little pullback here, and if momentum comes out, then we'll see that uptrend continue. But anyway, so if you have a $10,000 account, 40% loss, now you have $6,000, okay? Now you need, 50% would be, you need more than 50% to make that back. So you need probably 60%. Let's see. 6,000 times 0.6, 3,600. So you need even more than 60%. 6,000 times 0.75. So you probably need about 70% to make that back. 70% win if that's all your account. All right. Now you're back at $10,000, we'll say, where you're going to be close to there. So with this, you have a 40% loss. You need a 70% win to get back to $10,000. You see how much of a hole you dig for yourself? Now, if you're using consistent position sizing, so let's say you have a $20,000 account, or let's say you have a $30,000 account, right? And you're using a $10,000 size, and you take a 40% loss, which is still a lot, but you're down to $6,000 again. Okay, now you have $6,000 there. Overall, though, you still have $24,000, right? Or sorry, $26,000. $256,000. Yep, you hit the home run. Okay, now you have $26,000 total. All right. So $10,000 position, 40% loss. Now you have $6,000, $26,000 total, right? Now, all you need is another $10,000 position, 40% win, $4,000 profit, and now you're back to $30,000. All right, so you see how much you're setting yourself up for success there, and you're not digging yourself a hole with every loss by using consistent position sizes. So if you use those consistent position sizes, $10,000 position, you don't have to make bigger wins to account for your losses. You can do equal wins to account for your losses. And realistically, you should always have good risk to reward to where you can lose 2 or 3 trades in a row and still be making a profit overall, because your wins are going to be a lot smaller, or your wins are going to be a lot bigger than your losses. All right. So let me keep reading these comments, and then I'll talk about one of my strategies here soon, you guys, that I like to use. Thanks for the insights. Has the dog left the bed yet? I have no idea. That's hilarious. When you say that you short support and long resistance, is price hanging between both? What should we do? Sit out, basically. And you guys hear, like I said, Top Goon X buy signal. All right. Momentum came out, and we're popping now. So that's basically how I can use Top Goon X to trade. But like this, like a lot of people probably shorted here because we started to drop, but that was a support that I had charted out. So if you were shorting this, even though price started to break down a little bit and you were shorting based on your emotions, then you were just now stop hunted out. All right. Do I enter full size entry on my scalps, or do I split up multiple entries? I'm going to talk about that soon. But yeah, you guys, if price is going sideways, I don't trade. All right. So it depends on what time frame, but like a 4-hour chart. So basically up here, this was basically where I just didn't trade for much at all for like a few days. All right. Price is going sideways. My indicators were relatively going sideways. There wasn't much to do, right? Look at this. We went sideways, sideways, sideways. I don't trade very much in this. I could trade a lot in this because we're not just going sideways. So I could trade a lot in this. And then now we're kind of starting to go sideways a little bit. And this is when I slow down again. Okay. This is when I trade a lot. So this is when so here's where I would slow down again. I like these big moves, and then I like the rebound, and then I stop trading. And you can see we go sideways. All right. So then this is when I can start trading again. Green. And then I stop trading again after the initial rebound, and you can see we go sideways. And this is where I can start trading again. All right. And then we go sideways here. All right. So then actually technically again, I can start trading again here. Probably around here, honestly, that big drop. And if I miss it, then I miss it and I call it good and I move on to the next. But you could see this is where a lot of people get chopped up trying to catch the next big move. That's just not going to happen. So you really got to be careful in this sideways crap after big moves. It just seems to follow where a lot of people are like, if they're smart and they made good money or they took a big loss, you should just sit out and just let your emotions settle, et cetera, and then get back in after you've had a while to let price action mellow and get back in groove with the market. There's just times, you guys, you could be in groove with the market for 6 months or for a week. You could just be on point. Every Bitcoin goes exactly every support and resistance you thought it was going to go to, and you're just hitting it. And then the market changes a little bit, conditions change a little bit. And you're just wrong every time. Like the market's just going against you. And once you're wrong a couple times, then you're just out of sync, and it's just easier to keep being wrong. And that's when you should just sit out. The market doesn't like you at that time. There's plenty of other opportunities to trade. Sit out. Come back when it's better conditions for you. Is paying for TradingView worth it? I think so. I use it. So that's my 2 cents on that. You don't have to. I used the free one for a while, but the premium one just has more stuff that I need, plus alerts. Okay, I'm going to answer a few more questions, and then I'll talk about that strategy. Thanks, everyone, for joining me right now. We had over 1,000 people online already, and we have over 100 right now, which is great. So somebody said, I see you use OBV a lot. Why do you use it, and why? Check out my breakfast trades video on OBV. All right, either search it in Google, #breakfast trades. It's probably one of the videos that I've gotten the most positive feedback on from my breakfast trade series. So either search that in Twitter as a hashtag, find the OBV video, or go to my YouTube and find it there. I'm getting good at finding entries most of the time, but I end up losing because I'm over leveraged or I'm not putting my stop loss right. Okay, well there's a million ways to solve that. You can go smaller entries, because if you do a smaller entry, you can do a wider stop loss, right? If you're getting stopped out a lot, you gotta figure something out, okay? Because that's a problem every new trader faces. You gotta figure out something. So if you're putting your stop loss at an average of, like, let's say 2%, decrease your position size by half. So if you're using a $10,000 position, 2% risk, we'll say 2.6% risk, decrease your position to $5,000 and do a 5% stop loss. Okay, now obviously that wouldn't have worked out here, but the point is it's the same risk, and we should always be thinking about our risk, you guys, especially with leverage. You don't worry about how much money you're going to make. Anytime I get in a trade and I calculate the profit if it goes to my target, I can't remember the last time I've actually made profit and that much profit on a trade when I've calculated it, because it just screws with your emotions. It gets you excited about the profit you're going to make, that you think you're going to make, that you end up not making, and then it messes with you. So don't look at your P&L. And that's actually what I like about PrimeXBT, is that it doesn't show you a percentage. So I don't know how much money I'm making half the time. You can look in the top and it'll tell you, but I don't usually really look up there. Hey, Castillo, welcome, buddy. Castillo has a really awesome video. You can see Castillo Trading in the chat. You can check him out on Twitter at Castillo Trading. I've learned a lot from him on leverage trading, you guys. He puts out good info. Patience-wise, holy cow, he has taught me so much on just being patient, waiting for my entries, and taking profits when I have them. I've just learned so much from him on that end. He actually guest starred in one of my PrimeXBT videos, and he's the one that introduced me to PrimeXBT, where I use the strategy that I'm going to kind of just cover briefly here in a few minutes. But if you're getting stopped out a lot, just decrease your position size is one way to do it. Okay. Another thing you can do is you can ladder. All right. So if you're getting stopped out a lot, put an entry here, or let's say you want your entry to be like here, right? So if you're getting stopped out a lot, put an entry there where you want your original entry to be, like 1/3 or half size. Put another entry lower, again 1/3 or half size, depending on how many entries you want to do. So if you want to do it in thirds, do it like this. All right. And the key here is, you guys, if you ladder your entries, and again, I have PrimeXBT videos explaining this in more detail. If you ladder your entries and your lowest order never fills, you are never losing. All right? Because if price never goes down here, then it's got to go somewhere. It's going to go up, right? So if price never fills this entry, then I'm never losing. So if I never get my third one filled, that's a great problem to have. If you get your third one filled, great. If it doesn't, fine. And also, if you get your first bid filled, you actually want price to drop, right? So you're going to be like, oh, come on, go down, go down, go down. And it just keeps going. You're like, well, shit. Okay, well, I'm making money. If you only enter one entry right here at this top line, you're going to be like, if price dips, you're going to be like, oh, no, 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 no. And then it bounces at your lowest entry and goes up. So there's some emotional advantages to laddering. There's also, if you're not as good at entries or stop losses and you're not as exact, but you understand your TA, this is actually almost like training wheels. Okay, laddering I consider almost like training wheels for trading, because you don't have to be super exact. You just know, okay, I think price is going to bounce somewhere in this zone. I don't know where, but I just think somewhere in here it's going to bounce because this is a support and price bounces at support. All right. And in that case, I just start laddering a couple entries here with my biggest entry, usually my lowest, and I hope they get filled. All right. And the reason I do my biggest entry at the bottom is because that one has the tightest stop loss. All right. And so I just consider laddering training wheels for trading, and they're very useful. And then once you start to see like, oh, my third entry is getting filled every time, or my third entry is getting filled 7 out of 10 times, that tells you that you can drop your entries, or you can maybe just do one entry at your lowest entry and wait for it and hope it hits. And if it fills 7 out of 10 times, that's still great. All right. And if it doesn't fill the other 3, whatever. Right. So that's some different strategies you can use there. I'm reading. I think we're have a look at the 5-minute OBV chart. You'll see that OBV when it did a double top and went down. Okay. We'll look at that real quick just for you. Yep. So there you go. Hit resistance. And basically bearish divergence. All right. There we go. So, and then whenever Top Goon X crosses this middle line, we usually get a pullback as well. We're usually still bullish though. So again, that's kind of when I use Top Goon X to gauge trends. Top Goon X is telling me that the 1-minute trend is in an uptrend and we just crossed the middle. So when we cross here, we usually dip. So you can see here, we dipped when we crossed there, we broke out. We crossed here, we dipped, and then we broke out. So now I would expect more upside soon, as long as we hold probably like this support. That's my quick TA. So now, the strategy I was going to talk to you guys about. Also, one more question. Can fib retracement be used instead of laddering? You can use Fibonacci's for trading. They're great. Yeah, I mean, use fibs. They're good. I have videos on that as well. Fibonacci levels are good if you understand them. Oh, I was going to say one more thing, you guys. Oh, yeah. Except if you're wrong sometimes, all right? If you longed up here expecting price to go up and you're wrong, just get out. Just accept that you were wrong. Get out quick and reevaluate, all right? You FOMO'd an entry. You didn't even get your good entry anyway, right? Because that's not going to be, there's going to be no strategy that's going to have an entry up here, all right? So accept that you're wrong, because even though we think that price could still go up here, what if it doesn't? You have to always think that it might not happen the way you think it's going to go. Maybe this just goes down here and you get liquidated because you didn't put a stop loss. Okay? So be willing to be wrong sometimes, you guys, and just cut your losses. If you were in a short here, let's say you were in a short here or here, something, and you just got wrecked here if you didn't have a stop loss, because that was a big 1-minute candle. So you just gotta expect to be wrong sometimes and know that this shit'll happen. You guys, one time I tried to short Link and it seriously went up and this was back when Link was like $10. I tried to short the top, I tried to nail the top, and I was like, if I'm wrong, I'll just close it. Holy crap. In 10 seconds, it literally shot up like $2. Like in an instant, it literally just went boom, up the screen, and I couldn't even close out in time. And I got liquidated on a $2,000 or $5,000. I don't even remember what it was. I don't know if I got liquidated, but I took a big loss by the time I could get out. It just freaking rocketed. That very rarely happens, but no, it can happen no matter what. I had my hand on market sell, ready to sell if it went against me, and it went so fast that I couldn't even do it. So just be aware that can happen. You have awesome video on fibs. Thank you. Okay, EMAs, you guys. I made an EMA video on Elevate Trading. I don't think I made one here. Or for Twitter. So I think it's just available for Elevate members. But I can add an EMA video to breakfast trades. All right. I'm not going to go over EMAs right now, but yes, these are Gooner EMAs. That's what I use. It's a free script. You can use it. 11 EMA and 22 EMA. Okay. So here's the strategy I'm going to talk about, you guys. All right, I'm going to stop answering questions. I'm going to talk about a strategy here to end this, and then I can answer a couple more questions maybe, and then get out. Now, I'm going to talk about this as a short because it works better for me when I'm shorting, and I'm really good at shorting. So let's just say, let me find a good example here quick. All right. Trying to think. I think we've been kind of going sideways for a little bit. Let me find a good example. Okay. This would be a good example. All right. So we have a nice high volume, what looks like a breakout here, and a higher high, right? Now we do have some bullish divergence here. So that's a good start, or sorry, bearish divergence here. So that is a good start for me of how I could trade this. Okay. Now, it's very risky to take this trade here as a short, right? Because price just broke up. We actually are sitting above support, and we're consolidating in what looks like a bull pennant. All right. So I need to look at a lot of different factors. So this isn't going to be my whole, like, I'm not going to go through all the steps I would do to look for this because I don't have time to do that. But basically, let's just say that I'm considering shorting this because it was a high volume hit to resistance with bearish divergence. And I think it maybe could be a bull trap. And that's what I try to do when I'm trading high leverage, is try to find bull traps like this. Look at this breakout that immediately broke down, right? This one would have actually had a trigger. As soon as we would have lost this candle, I would have entered, all right? And I would have just gone my full size position. I would have entered right away, and I would have expected price to just drop immediately. And if I enter here and price doesn't go straight down, I'm getting the hell out immediately. I'm literally clicking market short, and I have my hand on close, on market close immediately after that position opens, and I'm expecting it to go straight down. If it doesn't go straight down, I'm getting the hell out right away. This is actually what I did short yesterday. I got in about right here. It was on Doge, but still, same thing. It went straight down. If it didn't go straight down, if I was in negative P&L at all for that trade, I would have immediately closed, all right? That is one of those trades that you have maximum R to R because you expect price to immediately drop or not, okay? This one was not max R to R. I didn't expect price. I wouldn't expect price to immediately drop here. So let's just say that I'm unsure and I don't take this trade yet. Or actually, let's do this. Let's do this one here. Okay, so let's say I short the top of this. All right, because that's what I do is I short these high volume rejections. This is a high volume rejection. Okay, so let's say I short this here, and I'm not super confident about it. So I might go like, here's what would happen. Okay, so let's say I short here, and I think we're gonna go down. Let's just say this is my target down here. Okay. This is my target. I short here. So I'm expecting and hoping, because it's always nice if price just goes straight to your target, right? I'm expecting price to go down here. Now it bounces up here. I have a decision to make. Do I put my stop loss at break even? Do I put it up here? Do I close in small profit, et cetera, et cetera? For me, I'm most likely, depending on the leverage, if it's a large position, I'm going to close soon. All right, I'm probably closing like here when it gets some high volume to just lock in some profit and accept that I might not be right there. If it's a small position like a 10x or a 5x or something, I might just put my stop loss at break even. If it works out, great. If not, I get stopped out. All right. Again, I keep tight stop losses when I scalp, you guys. Again, this is scalping. This isn't a trade setup per se to where I have like a strategy in place. All right. This is just me playing against the momentum and against emotions. So now we break up here. This is a stop hunt, right? But we don't know that at the time. So I don't know that. If I just 100x shorted this and I got stopped out at break even or small profit, I'm going to be too shook. I'm going to be too scared at this point to short this 100x leverage again, all right? If I went 5x leverage here, I might feel like I'm on top of the market and go here. But anyway, so I'm probably going to be a little hesitant. So I'm either not going to short this or I'm going to go very, very small at that point, okay? And this is where I like PrimeXBT. So let's just say my normal position size is 4 Bitcoin, all right? Now that's 4 Bitcoin with cross leverage on PrimeXBT, okay? So if I short up here, I'm going to do that full position, 4 BTC right here, and expect price to go straight down. If it doesn't go straight down, I'm going to close it. All right, we did have a nice high volume rejection here. That gives me more confidence to short here than, especially on this rejection. So actually, after this rejection, when price goes up here and rejects, this is when I would get in, okay? Now, and I would go to lower time frames for that as well. Now, I don't have a setup here. There's no really high wick here. So this could continue up, and it's kind of a bull pennant now. So if I still feel like we're going to drop, because let's say the 30-minute chart still had bearish divergence and we're at a resistance and I think we're going to drop, but I'm not confident about it, here's where I can start laddering a little bit, all right? Or start building a position. And this is where I can make big money because I ladder upon confidence and I cut upon no confidence. So what I mean by that is, let's just say I take so my normal position size, let's say 4 Bitcoin. Let's say I put a half Bitcoin up here, all right? If it keeps going and mooning, I cut that. It's a tiny loss because that's like 1/8 of my normal position size, right? So I put a half Bitcoin here. This candle kind of rejects and we're kind of just sitting here going sideways. And I'm looking at my indicators and I'm like, oh, we might break down here. So I might put another half Bitcoin, all right? And we break down on high volume. So then I say, okay, good. So we start dropping. So I've only got 1 Bitcoin position now. We start dropping. We go back up. And we reject on high volume. Now I might say, okay, I can add another. I feel good. I feel good because I don't want us to go above here. If we go, I'm in profit right now because I got 2 entries up here, all right, or 1 entry here and 1 entry here. So I'm in a little bit of profit. So I can add another position here. I can either add a half Bitcoin or another Bitcoin. So let's say I add 1 more Bitcoin here, okay? So now I'm at 2 Bitcoin. And if this goes against me, I can close in profit still. Right? I can still close this in profit because this one is here. So it's probably going to be close to break even, but I'm still average to slight profit for now. Okay. So this is helping me cover this loss if I go up. All right. So now we start to break down. All right. I'm feeling good about this. I'm in nice profit now. I got 2 Bitcoin in, only half my size. And then this holds here. So I'm going to be a little hesitant and I'm going to say, okay, we need to go down soon or else this candle could be a bottom and we break up. All right. And then I'm going to draw my trend line down here because this is going to be my new downtrend line. Now we break up here and reject on high volume. And this is going to be, okay, I'm in profit now on these 2 positions. I'm going to go the full position size on this rejection now. So I'm averaging in and making my entry lower, but I'm building it confidence wise. All right. And if we would just gone straight down here, I would have never added more. I would only had 2 Bitcoin in and I still would have made profit. But now I've got full size in. My average entry is now, whoops, wrong button, sorry. My average entry is now, we'll say, right here. Okay, I'll go a little bit lower. We'll go like right here is my average entry. So I'm still in profit. If it goes against me, I can close at about break even. And this is my new invalidation now too. So I'm saying this is a nice high volume rejection here. We just rejected and broke down. I want to see us continue now, right? This is my make or break moment for me. This price needs to go down now or this trade's over and I'm done anyway and I find a new trade. And what you see here is we broke down, we started going, and that's where I need to see price just keep going again, going for me and going for me and going for me. And if it doesn't and it breaks above my EMAs, I'm just going to get out. And you can see here, we reject, and price keeps going down and there's no reason to close. And now I can close somewhere down here. I usually honestly close early. Like if my target's here, I usually close here. I just do. It's not too much of a move, and that's usually where it gets choppy close to my target, and then sometimes it'll like rebound way up and then go down to my target. Sometimes it'll just front run me and just keep going up. So when we get close to my target, if we reject above it, I usually just close. But that's how I would do that strategy is if I don't feel confident about something, I will slowly build that position and get in a positive position to where if it goes against me, I can close immediately. Now, I'm not going to be building that position here and here and here and here and here. I don't like building against me. All right. Because like if I'm shorting here and doing that same strategy, that's great. I can keep adding here, but then I got to close on this. Because if I enter here, all right, and then we go down and I enter down here, and then we break up, I'm way underwater because my average entry is down here. So I got to get out. Like if I'm laddering into these momentum plays to where I think we should just fall, as soon as it goes against me, I got to get out. All right, you can't let these plays go against you too far. You can't add ladder there and then ladder here and then ladder here. It's just too much. All right, so ladder these consolidations when you start to have confidence that momentum is getting weaker. All right, like if I was laddering, let's say the same thing was in play here. Let's say I was laddering here, and then I laddered here, and then I added here, and we dropped to here, and we started going back up. What would I do? I would close immediately. And I've got 2 higher entries. I got a lower entry here. My average entry is somewhere around here. I close at about break even. All right, which is fine. Dude, come on, man. Put user in timeout. Somebody's in a timeout. Who is that guy? Okay. You're in timeout, buddy. Okay, let's see. So that's one of my strategies, you guys. Otherwise, my strategy would be isolated margin, 1 entry, tight stop loss. So those are kind of my scalping strategies. There's more in depth to that. I hope you guys found that useful, though. Can we trade without indicators? Sure, you can trade without indicators. I trade without indicators all the time. I actually don't like using indicators. I like to see, this is what I talked about, you guys. If you're wrong here and price just keeps going down, you're very wrong. Just cut it. Cut it here. I cut Link and people were mad at me on Twitter. I bought at 37 and it went up to 41 or 42 and I was going to hold it for a long time. And then I bought more at 39. The next day it dropped to 25. So I was down like almost 50%. And then it bounced to like 31 or 32 and I cut it at like 20% loss. And then it dropped again. So, no, I'm not going to make any live trades today. I don't trade on weekends. So, but anyways, I really hope you guys found this useful. I really appreciate you all joining. I have over 150 people in here. That's amazing. And over 1,500 views now. That's got to be one of my best live streams ever. So thank you, thank you, thank you. Let's see. I'm just reading your comments. Any last questions before we take off? Otherwise, new breakfast trades video on Tuesday. New PrimeXBT videos on leverage trading will be coming soon. If you do want to try out PrimeXBT, please watch my tutorial on my YouTube. Also, please understand that it is cross margin. Understand how cross margin works, and you can actually learn how to manage your risk using cross margin on my video as well, on my videos on YouTube as well. And if you use my code, it's in the description, PrimeXBT/Gooner. If you use my code Gooner at sign up, you'll actually get like a 50% BTC deposit bonus to use towards your equity, which is really helpful. How do you deal with losses on high leverage? I find myself flip-flopping, thus furthering my negative P&L. I have a hard time keeping my profits. Yeah, I mean, we all go through that. That's a normal issue, all right? The biggest thing is to try to develop a strategy, and then you only take the entries when that strategy is met, right? So let's say I need bearish divergence on OBV and RSI, and I need price at a 4-hour resistance at the whatever Fibonacci level to be able to short, and I need a bearish EMA cross or something like that. So I need like 4 confirmations. If I get that, I'll enter, and that's the only time I'll enter. And I'll do full size on all those with like a 5% stop loss or whatever you want, and that's the only time I'll enter. That's a very good way to keep your emotions in check and only enter based on your rules. Now, if you have 2 or 3 met, or let's say you have 2 of those criteria met but not all 4, but you still want to enter that trade, maybe you go like 25% entry or 50% entry or something, right? To reduce your risk, you don't have as high of confidence in that. Another thing, you guys, I do is I withdraw profit. I withdraw profit from my trading accounts every day. If I'm in profit, I take the profit off. If I make $1,000, I take it off. If I make $10,000, I take it off. And I keep those accounts at a standard amount. All right. On weekends, I seriously pull funds off of my DGen account. So my main account, I can't even log into on my phone. I only get onto that on my computer. My DGen scalp account that I keep like $1,000 in, I literally take that out on the weekends and either take it all out so I can't trade, or I'll leave like $250 in case I get bored and I want to like do some degens with the volatility or something. That's because it's just good risk management, and I'll find myself sometimes bored and just like going on and trading and losing, money for no reason. So that's one way I do that on the weekends to keep myself from trading, is just to take the money off of that account that I have easy access to on my phone, which is my DGen scalp account, right? And those of you just joining, please watch the whole video. I did talk about having multiple accounts to help manage emotionally. So Crypto Wave did ask how to deal with losses. That's one way. If I take a big loss And I should never take a big loss. All my losses should be calculated and they should all be relative. Now, every once in a while we get cocky or we make a dumb play or we forget to set a stop loss or whatever, and we take a big loss. It happens. When that happens, I take the day off. I might take the next day off too, and maybe even the next day. If I take a big loss, I'm just going to want to make that back right away, and then I'm just going to be forcing things, and I'm going to feel like a gambler, and I'm going to feel mad at the market. So taking a couple days off will help you kind of reflect and just kind of like get away from it. And then when you come back, you're more fresh, and you can be like, all right, let's go back to what we usually do. And if what you usually do is profitable, you're going to be fine. The problem is you take a big loss and you don't do what you usually do because you try to make that big loss back. And then you take another big loss and you take another big loss. And that's when you kind of like when the market just gets to you. And that's happened to me before. And I just don't let it anymore. All right. If I'm feeling like if I lose a big amount on my main account or something and I still want to trade or I'm like still pissed at the market, I might go to my Degen account and throw like $500 on there and be like, all right, I just lost 10K. Let's see if I can take this $500 and turn it into like 2 or 3K on my Degen account. All right. And if not, if the market still kicks my ass, I'm down $500. If I do and I have a couple good wins and a couple good trades and I at least feel a little bit better and I can just take the day off or whatever. Hold on, you guys. I'm just going to turn my fan. It's getting a little hot in here. Where can I find Goose Indicator? Top Goon X. Top Goon X. So, yes, the indicator here I use, whoops, wrong chart, is Top Goon X. Okay, it's available to Elevate Trading members. If you want to check it out, Elevate Trading, that's the group I post a lot of my trades in and all that good stuff. So feel free to check that out, you guys. It's actually what this is on my shirt. But yeah, I run that with a couple other guys. We do a lot of education, lots of education. I posted a lot of information before that dump to 30K, basically saying that I was chilling out and I was keeping my risk very, very low because I knew the potential that we could just tank was there. So I only bought one Bitcoin at like 39K and I put my stop loss at 38,600. So I lost $400 in Bitcoin on that trade. Because I really wanted to build heavier exposure because I thought that support would bounce, but the risk of a drop to 32K from there was high, and I was about to go to bed, and I didn't want to deal with it, and I could wake up in the morning and find another trade. I always think about risk, you guys. There's just always like if we weren't thinking about risk the last 2 weeks, we just got hammered because we're like, oh, price will bounce. I always think that price can go against me, always, because you trade long enough and you realize price does go against you a lot. And if you're not ready for it, then you get hosed, which a lot of people experience this week. Yeah, it's Crypto Wave. Thanks for asking that question. All right, you guys, I'm about to take off. If nobody has any other questions, again, I really, really appreciate you guys joining. All your support online and everything. I really just enjoy bringing education to you guys. I've made a ton of mistakes starting out trading. I still make mistakes. I just like to help you guys hopefully avoid my mistakes or be able to just teach you about them and let you know that they will happen and it's normal. And we just need to not destroy ourselves and completely wreck ourselves during that mistake period. All right. I wish I had somebody kind of helping me get through these mistakes when I was starting out because I kind of had to learn them and then realize that they are normal and I'm not just an idiot. And it's hard at sometimes because you really feel like you've got it figured out a lot. You'll get in phases where you really think you got it figured out, and then you just get knocked back down. And you got it figured out again, and you get knocked back down. And once you've really done this a long time, you'll start to notice that there's different market conditions where you are a trading god, and you take advantage of those. And then there's market conditions where you don't know what the fuck's going to happen. And it's okay to admit that. It's just I get so much hate on Twitter if I admit I don't know what's going to happen. But if I admit that to myself, then I'm so much better at trading because I can be like, all right, I had no fucking clue what's going to happen right here, you guys. No idea. But I can say this is going to go up or down, which is fine. It's okay to say it's going to go up or down, guys. That's not a bad thing. This is how real traders take advantage of the market, and this is how real traders do it. They say, all right, if this goes up and flips here, I'm going to long. This goes down and flips here, I'm going to short. Now, please don't trade off this. These are just examples. But this is how traders do it, and this is where they plan their entries, either direction. They don't just say, okay, I'm just going to long here because price is going to go up because we've got bullish divergence on the 10-4 radio strip landing, and the cornfield is flaming today. So whenever the cornfield's dry, we always go up, and then the sun comes out, and then you look at the sun and you hear the roosters crowing, and yep, Bitcoin's going to go up, so we got to buy. Okay, it's not always going to go up or down, you guys. Please understand that. Or sorry, you're not always going to know if it's going to go up. You're not always going to know if it's going to go down. Understand that. Use it to your advantage. You don't know what's going to happen. Make a plan or sit out. When you feel like you know what's going to happen, that's when you take advantage and you make that trade. All right? Thanks for the stream. Thanks, you guys. Yeah, really, 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 really appreciate you guys all joining and all of your support. I just can't thank you guys enough. This has been really fun, and I enjoy sharing all my experiences with you guys. But stay tuned. I'm sure I'll be bringing out more content to you guys soon, especially on Tuesday. Like I said, I got another breakfast trade video I think you guys are all going to like. But anyways, have a great weekend, everyone.